Hello, it's good to have you join us today on our weekly magazine program, The Portfolio. It is a program that highlights national and global finance and economy matters on NTA News 24, reaching you from Abuja, the nation's capital. NATI audit reports show that the Nigerian National Petroleum Corporation and its subsidiary, Nigerian Petroleum Development Company, and other companies in the oil and gas sector as of 2015 failed to remit the sums of $22.06 billion and 481.75 billion naira to the Federation account. And on liquidity, more than 1 trillion naira will hit the market system this week as Treasury bills mature and Federation Accounts Allocation Committee funds enter the financial market. The Lagos court adjourns case between the Central Bank of Nigeria and telecom giant MTN to December 4. And the effect of trade war between the US and China takes its toll on Asian markets. I am Vivian Itekpefo, your guide for this edition. Still talking developments in the economy, Comfort Amodu is standing by with news of happenings in the world of business. Over to you, Comfort.
A very warm welcome to the segment. Now, the Association of Bureau de Change Operators of Nigeria has called for collaboration with the Central Bank of Nigeria in enhancing the operations of its live exchange rate website as part of efforts to improve transparency and stability in the nation's foreign exchange market. The association, in its economic review for the third quarter of 2018, noted that the daily publication of exchange rate plays a huge role in the marginal appreciation of the naira in the Bureau de Change subsector in third quarter of 2018. Hence the need to partner CBN to sustain the appreciation of the naira achieved in the BDC segment in fostering transparency and stability in the foreign exchange market. The report stated that during the third quarter, the CBN sustained its weekly dollar sale of $60,000 per BDC, but naira depreciated by 2.6 naira in the investors and exporters windows and by 63 kobo in the interbank foreign exchange market. And financial experts call on government to pay more attention to issues bordering on multiple taxation in the country. They equally appeal to the federal government to harmonize tax laws at all government levels to reduce the burden of multiple charges on taxpayers, as well as sustain investment flows into Nigeria.
We advocate for what we call the consolidated tax law, in which the state and the local government will have a single tax code which identify a state and local government revenue officer to be an officer of the same agency. So whoever is collecting in this local government is collecting on behalf of the state.
And now stakeholders in the investment, entrepreneurs, private and public sectors have continued to call on government to encourage more businesses, implementation, policies and financing of small businesses, particularly in the rural communities for self-sufficiency and in a way generate revenue.
Even banking systems to make it more inclusive for rural people. The only way is to ensure that you at least build people. If you do not have a band for pricing, it is difficult to find entrepreneurs who will go into that business.
They maintain that entrepreneurship remains the key to unlocking economic development in the country and also emphasize the need to train a new generation of entrepreneurs in delivering opportunity, job creation, and social impact on the continent.
You should look at creating solution to a particular problem. That is where streams of income come from. If we are looking forward to leadership, it's something we actually really need to address.
And with that, we end the segment. Thanks for watching. I'm Comfort Amodu.
Thank you, Comfort. Now let's move to the discussion of the day. And that is matters from Monetary Policy Committee meeting. And Chimobi is our guide.
Welcome back. The last Monetary Policy Committee meeting of the CBN rose from its meeting adopting some of the already existing frameworks from the monetary policy engagements. However, some analysts believe that the most appropriate monetary policy decision under the current economic and financial market situation is to hold policy rates at the current levels despite new pressure points. I have here in the studios a professor of economics and a non-executive director and member CBN Monetary Policy Committee, Mike Obada. You're welcome to the program. Thank you very much for joining us.
Thank you very much for having me.
All right, so first of all, let's get your assessment of the decisions of the last Monetary Committee meeting where the CBN MPC decided to maintain the 14% rate.
Well, thank you very much. I think those decisions were informed at the time by emerging realities. You will recall that the inflation rate had increased up to 18.7% by January 2017,
yes,
following the triple shocks to the economy in 2016 in the form of a very high rate of exchange rate depreciation, a hike, very serious hike in petroleum product prices, and also electricity tariffs. Consequent upon those shocks, the inflation rate started building up, and it got to a crescendo in January 2017, when the rate was as high as 18.7%. And the Central Bank of Nigeria, taking cognizance of its responsibility, primary responsibility of ensuring price and monetary stability in the country, went into action by taking a series of monetary policy measures with a view to checking the upsurge in liquidity and then invariably get a headwind on inflation. And those series of actions manifested in monetary policy rate action, the liquidity ratio, and then some other measures like the cash ratio, began to yield very important results. The impact was quite phenomenal, positive impact on liquidity and money supply. And that resulted in the consequent successive declines in the rate of inflation, such that by August this year, by let's say July this year, the inflation rate had reduced significantly to 11.14%. But by the time the Monetary Policy Committee had a meeting in July, I think there were signs or headwinds that the inflation rate could be on a reversal trend. In other words, stakeholders, members of the public were generally in expectation that the inflation rate will continue to decline. And even with the authorities, the expectation was that if the tempo of decline of the rate of inflation was maintained such that a single-digit rate of inflation was attained, then that will provide a basis for doing what the general public has been expecting, to reduce the monetary policy rate, perhaps also ease the other indicators like liquidity ratio, cash ratio, and so on.
many months down the line after that decision was taken, can we say that that decision had actually had a positive impact, looking at the circumstances and the critical situations on ground?
Well, it's relatively short. Between the last meeting was held in September.
September, yeah.
So let's say just about a month ago.
Yes.
As it were. Within the period, the federal government announced a release of the first tranche of capital budget for the year, which is about a little less than $500 billion, dollars. Once if that one is released and implementation begins, it could possibly affect, the movement in prices. The minimum wage thing agreement has not been reached. From what we now know, there are claims and counterclaims as to the agreement reached, but it appears that the government, has really not agreed, as evidenced by what the Minister of Labor and Employment, has been saying. So, but one thing that you must know when you're talking about whether the policy, position, the decisions of the Monetary Policy Committee have yielded impact. One thing you must note is that at this point in time, it's not just the actions of the Monetary Policy Committee or the Monetary Authority, that are critical for checking inflation, ensuring price and monetary stability, because some of the factors that are now operative in affecting the direction of inflation up or down are beyond the monetary purview. They are strictly, some of them are not monetary factors. For instance, food inflation is a major element of the, marginal increase in inflation rate that's been observed, in recent times. And the one major reason for that one is that the food production belts, areas of the country, have been adversely affected by these, herdsmen-farmers clashes. A situation whereby farmers feel intimidated, and they run away from their farms, and some of them now become IDPs. The implication of that one is that food supply is negatively affected. And if food production and supply have been so negatively affected, then it has, a negative impact on the price level. So you see, there are so many factors like that. The issue of insecurity is also a major factor. The federal government has been doing, its best in the area of ensuring security in the northeastern part of the country, which also happens to coincide with the food zone.
All right, so the MPC raised some concerns about the rising levels of non-performing loans.
Yeah.
Of course, it is linked to the global oil prices and all of that. Recommended measures that the banks could take to check this. What could be your what could be your recommended measures that bank could take, to checkmate these issues of non-performing loans?
Well, yeah, the central bank has rightly, for quite some time, been quite concerned about the issue of non-performing loans.
Yes.
Because the bank is fully conscious of the full implications of very extensive non-performing loans, which can lead to, so much instability in the financial system. In the extreme case, you will find that, depositors, small-scale depositors could lose their money. But the current leadership management of the bank has been so concerned that it's done everything possible to ensure that no bank goes under. And that is the reason why the last action was also taken, takeover of the Sky Bank, in the form of a bridge bank being set up to acquire the assets and liabilities of that bank to ensure that no depositor, big or small, loses money. So the bank has been working to ensure that there is confidence in the financial system, that depositors, investors, are not put in a position of panic. We can destroy the system. So invariably, in terms of what can be done, a lot depends on the banks themselves, because we expect them to do very critical due diligence even before giving out loans, because the empirical evidence over the years has shown that some bank promoters, bank owners have contributed inexorably to the destruction of those banks. And because they gave loans to people, including themselves, through insider deals, loans they knew would never be repaid. And such, exposures tend to put the banks in difficult positions. So they must do due diligence. A significant proportion of the non-performing loans is attributed to the oil and gas sector. And that one increased as a result of the negative shock, 2015, 2016, to the oil market. A significant proportion of loans was given to businesses in the oil and gas sector. And once the market tended to collapse, prices reduced. It also reduced the ability of the borrowers in that sector to repay the loans. So such shocks can be excused, but then the banks must still take precautionary measures to weather, the storm when such shocks emanate. But the important thing is that banks must be managed and governed properly. People who want to use the banks as an avenue to reap off the public, you collect their deposits, and then the funds are misappropriated or outrightly stolen from the bank. Such people should never be encouraged, to be part, of setting up or managing, commercial banks.
Away from the MPC meetings, participants at the 24th Nigerian Economic Summit meeting made series of suggestions, on how to get sustainable financing for electricity supply in the country. Some also advocated franchise. Others even called for the review of the current MITO model, that's the metering model. In your view, how can the nation achieve sustainable financing for this very critical sector?
I know the central bank itself has even gone beyond its normal mandate, and of course within the framework of its development mandate, to try to assist the power sector in the past. Funds had been given to the power sector. But I think one thing that we need to, be clear about will be what segments of the power sector are really in need of this financing that we're talking about. Is it the DISCOs? The DISCOs that are the distribution end, or the GENCOs that participate in generating electricity, or in the transmission company of Nigeria, which produces the basic infrastructure. But I think the one that has been concerned or using financing as alibi is the DISCOs, as it were. The impression that the DISCOs give is that the promoters, the investors in that subsector who bought the distribution enterprises from the federal government, yes, were apparently not ready for privatization. They were not ready to take over, the enterprises. Otherwise, they should be able to approach the commercial banks, because they are operating businesses, approach the commercial banks, fulfill necessary conditions, and take funds, take loans, and then expand their facilities, make sure that whatever electricity that is generated and allocated to them, they are able to distribute, to the consumers. But they are not doing that one. They don't seem to be willing to get to the commercial banks and then, take loans, use the loans efficiently and effectively, and then make sure they distribute, electricity, provide meters, because that's a basic instrument. If they have meters installed to every household and they are able to, receive electricity generated, they now distribute, there is no reason why they will not make money, and repay whatever loans that they, have taken. But it seems that they are not that willing. So sustainable financing, there is no running away from it. Government is not a commercial bank. Whatever assistance that the central bank provides is ad hoc, once in a while, just to save the system from collapsing. They must necessarily still have a recourse to commercial banks, which is the major source of financing commercial enterprises in market economies.
All right, thank you very much. I've been speaking with a professor of economics and a non-executive director and member of the CBN Monetary Policy Committee, Mike Obada. Thank you very much for coming on the show.
Thank you very much.
We're really glad to have you, really.
No, I appreciate the opportunity.
Moving on now to the capital markets, where stocks seem to remain on bullish sentiments. We now join Muplang Dakok with the weekly capital market review segment.
The week ended 26th October saw the NSE All-Share Index and market capitalization appreciating by 0.20% to close at 32,907.33 and 12.14 trillion naira. Investors exchanged a total of 1.45 billion shares worth 15.2 billion naira in 16,682 deals. The financial services industry led the activity chart with 1.22 billion shares traded in 10,520 deals. It was followed by the conglomerates industry with 92.190 million shares valued at 452.9 million naira. The third place was occupied by the consumer goods industry. Trading in the top three equities measured by volume recorded by FCMB, Access and Sterling Bank accounted for 695.3 million shares valued at 2 billion naira. Diamond Bank, Law Union on Rock and Fidelity led the top 10 prize gainers, while the losers were topped by Mark Nichols, Lafang Africa and Better Glass. Also traded during the week were 280,000 units of exchange-traded products ETPs valued at 3.385 million naira, as well as 20,430 units of federal government bonds valued at 20.7 million naira.
Thank you, Muplang, and that's the size of our package. Until we come your way again next week, same time and same channel. Let's keep talking business. We value your feedback. Please do follow us on our social media handles. I am Vivian Itekmefo. Many thanks for your time.